Hey, Steven.
Hey, what's up, man? How you doing?
Yeah, Beth. Thanks for taking the time.
Yeah, definitely, for sure, man.
Yeah, so one thing that just like what we talked offline through text message in the last week or so, I wanted to bring you on just to help us, well, educate me. And a lot of people I know, they're not familiar or they don't have the experience with what you do.
Yeah, yeah,
So
for sure.
seeing if you can introduce yourself, what do you do, how long you've been doing it for, and how do you help people?
Yeah, sounds good. I'm Steven Zhou. I've been working as a financial advisor right out of college. Graduated from UC Davis in 2013 with a manager economics background. And funny thing is, I actually don't use anything I learned from college for what I do today. So everything I did was learned on the job. And
What
so
did you go to
now,
school for?
what'd you say? Sorry.
No, no, no. You said that you went to school. I didn't hear that part. What did you go to
Yeah,
school
yeah. I
for?
went to UC Davis and then graduated in 2013 with a Bachelor of Science in manager economics. And so the
Got it.
whole idea going that route was because I was like, I don't know what I was gonna do when I was in college.
Mhm.
I was like, I'm gonna go into business. I'm gonna do something, right? And then so I thought I was gonna do taxes and whatnot, but I hated it when I had an internship. So I was like, screw this, And then looked around after college when I graduated and found financial advising, and I was like, huh, this is interesting. So when I first, was looking for a job, I think I got interviewed by Morgan Stanley, and then there was Mass Mutual, and then Morgan Stanley was like, "You can't work with anyone unless they have at least $250,000 to invest." I was like, "What the hell? Like, where the hell am I going to find some people with that money, right?" Because, growing up in East Oakland and everything, like I don't even know people with $2 or $3,000 in their checking account. So it's like they're telling me to go find someone with $250,000. I was like, "You're insane, right?"
Let,
A
let me
little,
ask you this. Let me ask you this, Stephen, real quickly. So after school, you were like, you just kind of it came across this. Was it a job where you're like, hey, the pay looks good, or was it something that you were really interested in?
I had no clue, honestly. Like, I was just looking for my first job for experience because at the time after I graduated, I had no clue what I wanted to do. I just always thought I wanted to do something within business related, just because growing up in an Asian household family, it's like you're either doctor, lawyer, engineer, or you're trying to make money somehow, right? So I figured business was the way to go to make money, and so I was like, all right, cool. I looked around, and then a financial advisor just caught my eye because it wasn't something where I'm like sitting behind a computer all day. They were like, you're gonna be working with clients, you're gonna be talking to people, meeting people, building relationships. And I was like, that sounds kind of like something I'd be interested in. And so when I applied, it's like, and then I got the offer from Morgan Stanley and Mass Mutual. They were telling me that Mass Mutual was telling me I didn't have a salary. It's going to be strictly commission, and I would have to build my own book of business in my practice. Whereas Morgan Stanley was like, we'll give you a base salary plus commissions. But then they told me that, $250,000 clientele list. And I was like, I have no clue where I'm going to do this. So I went with Mass because they were going to put me with a mentor. They were going to help me build my practice. But only catch was there's no, what do you call it? There was no pay. There was no base salary. So that was a little concerning because out of college, you got loans to pay. And then, my family, they don't have any money. So it's like just pretty much on my own. And so I was like, I really got to make this work. So I was pretty much networking, 3 to 4 times a week in the beginning, trying to build a business. And I did bad the first 2 to 3 years. Like I literally thought about quitting every single day. But
What made you not quit?
I think just the culture in which the company, where everyone was like, this business is all about survival. And looking at some of my peers, some of the senior advisors who've been there for 10, 15, 20, 30 years, they are all making a shit ton of money. And so it's like, it's crazy. And I'm just like, you know what? If they're telling me their stories that they came from the same place where they were struggling the first, 5 years, so to speak, I was like, you know what? Maybe I can do this. I just got to stick with it. So I believed them. I kept with it. And it wasn't until maybe year 4 or 5 where things started getting a lot better than it was when I first started.
So you mentioned that 2 years you didn't have much production.
Yeah, not at all. Oh my God. I
So,
barely hit the quota to be kept on as an advisor.
so that's where I was getting at.
Yeah, exactly. So the quota is actually pretty low. Honestly, if you're working in this line of business and you're just meeting quota, you should just quit and get a regular job because it's just not a lot of money. And but the thing was, like, I didn't know where I was gonna find clients from, so I kept networking every single day, and then it didn't really work out because in this line of work, a lot of people when they first meet you, they're the first thing they ask is, oh, how long you been doing this? I can't just tell them, 5, 6, or 7 years, right? I have to tell them like, oh, I just started or something like that. And so because of that, I think a lot of people were hesitant to work with me, especially when it comes to working with finances. So yeah,
You
that's
mentioned you mentioned bills
yeah,
and the cost of living. I mean, we live in the Bay Area, so for those
yeah.
2 years, You were barely making quota.
Yeah, I was barely
What?
making quota. Yeah.
So how did you live?
I got pretty lucky because I mean, at the time, I moved back home, right? So I was able to live with my mom.
Okay.
So that took her a lot of the costs. So when you don't have to pay rent, that makes it significantly easier to live off
Okay.
of very low wage, right?
But that's a appreciation that we need to see that hey, we have our parents to fall back on.
Absolutely.
That's
Absolutely.
big
Yeah.
because a lot of people they don't have that.
Exactly.
So
Yeah, because I mean, if you look at Bay Area, it's just so expensive to live here. Rent at, on average is like anything over 1,500 to $2,000 a month, right? So
I know you mentioned there are some senior advisors. Did you have some sounding voice to just like, hey, stay with it, or was it kind of a combination of a few things? Because 2 years is a long time.
yeah, so definitely a lot of mentorship because the company have a lot of people that had support for me. So that was great. And then I also met a couple advisors that really took an interest in me and kind of showed me the ropes and taught me how to run the practices. And so I owe everything to them, right? So that's why today, remember, I don't we had a conversation before doing this where we were talking about how I'm leaving to kind of merge my practice with another advisor. So the person I'm merging my practice with is actually the person that is one of my mentors that started with me at Mass. He started before I did, but because of that, I was like, I feel comfortable, working together with him. And that's why he's my business partner today.
So you went from 2 years as just like, hey, what is going on? I'm
Yeah,
gonna quit. I'm gonna quit. And then
yeah,
now you're actually pursuing your own business with
exactly,
your previous mentor, and you guys are going to be partners now too. So
exactly.
that's a big opposite end of the spectrum from wanting to quit to going to
Huge.
your own business now.
Absolutely, yeah. And I tell everyone, it's like if everyone's interested in even starting a practice like this, right? Because you have to start pretty much how I did. It's like you join a brokerage company like Mass Mutual or insurance company, and then you work as an advisor to gain experience. And so for me, it's like if if I can do it, honestly, I really think anyone can do it because you just gotta survive.
I'm sure there was more to that, but then
Yeah,
so that leads me to what I wanted to bring you on for. So if you were to ask me 10 years ago or so, I had no clue what financial advising do. I know that's a name, and I know there's people that do that, but and I still to this day I work with some partners and I speak to a few friends or colleagues that does financial advising, but it's still a little foreign to me, right? I get
yeah.
the base of it, but what I really want to learn is how do you help people?
Sure, sure. Yeah, the common misconception with financial advising. So I'm an investment advisor. I like to call myself a financial strategist
Mhm.
because the word financial advisor is kind of misleading. Because when people hear financial advisor, the first thing they think of is stocks, right? They're like, okay, you basically help people buy and sell stocks. And so a lot of people are just hesitant to talk to me because they assume that they need a certain amount of money before I can help them. Whereas when it comes to financial planning, it's I call myself a financial strategist because we're not just teaching people how to invest and buy stocks and sell stocks. We're actually looking at it from a bird's eye view, from a whole spectrum of, how are you saving? What's your cash flow situation, right? What do your bills look like? And then are you able to save money? If you're living paycheck to paycheck, how can we save that? So we start from stuff like that, and then we try to teach people to build a healthy savings habit because if you think about it, like a lot of times when it comes to money, it's all psychological, right? If you are used to living off, let's say, $80,000 a year, all of a sudden you get a $20,000 raise. Most people end up spending that $20,000, right? Whereas, why couldn't you just pretend that you never made the $20,000 and just live off the 80,000 and continue doing what you were doing, and you could save the 20,000? You'd be in a much safer position financially. All right. So that's the number one thing where I try to teach people, it's like it's a habit. So if you can force yourself to save, $50, $100, a month, or sometimes maybe even a week, it's just basically not eating out once a week, right? Because nowadays if you go out to eat, it's like 50 to $60. When me and Danny go out to eat, it's almost like 80, $100 because we're so fat. So it's crazy.
Big eaters.
Exactly. Danny's even bigger. He's a bigger eater than I am. So so just little stuff like that. And that's kind of what we try to teach the younger clients that we work with. Older clients, it's more so teaching them, now that they've built the nest egg, how do we help them spend this money in retirement? Because
Hmm.
what most people think about is like, okay, now that I saved all this money, spending should be the easy part, right? Whereas when we look at it, it's actually the hardest part because when you're retired and you have a pool of money, how much of this can you actually spend is the biggest question mark because we don't know how long we're going to live till, right? If we knew exactly what day we were going to die, let's say at age 85, retirement planning would be very, very easy because all we do is just take however much money we have plus the growth that we get from the investments and then just divide it by 20 years, 65 to 85. And that's how much money we can spend because you can't take it with you when you leave. Right. So unfortunately, we don't know what that day is. And therefore, a lot of people end up running out of money before they die. And so that's why we come in and try to put together strategies to help them figure out, what is the appropriate amount to start spending while also maintaining a healthy investment balance of, bonds and stocks, make sure they're diversified.
One thing that I just wanted to touch upon before you move on was that you mentioned that you help people from a young age to
Yeah,
even older people too, right? And then you have different strategic plans for them.
exactly.
So, so a lot of people, including myself, growing up, my mom, she came from a foreign country where
Mhm.
the concept of financial advising, it's a little different, and then where some people, and even people that grow up here, they're just not exposed to that.
Exactly.
So you go off, and some things we pick up here and there from advisors, friends, but you're out there like, hey, you can help the young people at a young age start building their future.
Exactly.
So what age group would you say that you come across? I mean, is it just varies or?
It honestly varies, but a lot of time people reach out to me. It's usually after college when they're at least starting to make some kind of money, right? And then they're like, "Well, now what do I do with this?" Because a lot of times, like people who just graduate from college, they're still worried about paying off debt.
Mhm,
And also at the same time, it's like I used to try to help as many of those people as possible, but now that my time is getting a lot more constricted because of all the clients that I have, it's like I don't have enough time to do a lot more pro bono cases. Whereas in the beginning, I was
got it.
trying to get anybody I could get in front of and just trying to help them figure out, this is what you should do. You should start saving here and there. Right. But and a lot I also get a lot of people that come to me like, hey Steve, I have $1,000 in my checking account. Can I invest this?
Mhm.
Which my answer is going to be absolutely not, because you should be better off leaving this money in cash for emergencies, right? If that's all you
Mhm.
have. Because
Yes.
everyone just assumes the market's this magical place where your money's gonna grow. I mean, if you think about it, like if you have $1,000 invested and you had a 10% rate of return, which is really good, by the way, right? In a year, you still only made right $100.
Mhm.
It's not a lot of money. It's a long
No.
term
Yes. Yes.
thing, right?
So some of the practice that you mentioned was just mindset, which is great. I love that because we can take that with pretty much everything in our day-to-day lives,
Exactly. Yeah.
whether if it's saving money, exercising, not eating out as often, like what you
Exactly.
said.
Yeah.
And those are some of the things that you talk through some of your clients.
Yeah, so it's like the main thing is like instant gratification versus delaying it, right? Because a lot of times we eat instant gratification. A lot of times we spend the money we make, again, instant gratification. So it's all about just it doesn't mean you can't enjoy those things. It's about creating a healthy balance.
But how would you, because I know you're the advisor, and at the end of the day, it's their life.
Exactly.
So how do you like hold them accountable,
Uh,
or how do they hold you accountable? Like, how does
yeah, yeah,
that
yeah. Very good. Yeah,
dynamic works?
good
Yeah.
question. It's a great question.
Yeah.
So, I completely understand you can't force anyone to do anything, right?
Yes.
So I utilize more of a motivational type of approach, right? So I'll usually take out a calculator. I'll show them, if you're able to save, let's say 5,000 or even $10,000 a year, right?
Mhm.
Let's just say you're able to set aside some money, and then I just show them what it looks like after a course of 10, 20, or 30 years with a assumed 7% rate of return. And then a lot of times that motivates them because it shows them that you don't need to have a boatload of money to start investing. It's all about making these small choices every day here and there, sacrifices to put aside some money, and just trust the process that you're gonna eventually build a nest egg. But if you talk to just a lot of our peers today, and a lot of people aren't doing that. They don't think about that. They save the money in cash. Okay, that's one thing, and they don't ever think about putting it into something that's going to help them grow. Right. So whereas a simple calculator can just easily show them, your $10,000 a year that you're saving after 30 years, if you're getting a 7% average rate of return, which is pretty attainable, you're gonna have $1 million after 30 years.
And are you open to, like, if someone were to reach out to you, because I want to be able to give your information
Sure.
in the description. So you're open to taking new clients, right?
Yeah, absolutely,
Okay. All
absolutely.
right.
Yeah. In
Okay.
the past, like a lot of times where we get our new clients is through workshops. We do seminars and stuff like that, but due to COVID, we just stopped doing that for now. And As of now, I'm just servicing my existing clients, working off referrals. But anything, friends, families, if you guys know anybody that wants to talk to me, I'm always happy to open to helping friends and families.
Yeah, I know you were open to that. Danny mentioned that to me a while back too, that hey, you know what, he spoke to you and
Yeah,
you were open to help. And then we spoke offline, what, about a couple weeks ago. So I got
yeah,
some good insight. And of course, if I need to reach out, if I have more questions, then I'll do
absolutely.
it.
Feel
So
free to. Don't ever
but,
hesitate. Like
but, but
this isn't really working to me. I love just teaching people these basic concepts, right? I think everyone should know, and so it really doesn't bother me at all to be able to take these phone calls or even do a Zoom workshop with anybody.
so when we spoke, and just using my example, so someone around my age where they have a 401k now,
Yeah.
and they may have some savings and some investments and stuff, like what, how would you, just high level, I know you didn't get to
Sure.
see everything yet, but then what would your strategic plan be, kind of, for me?
Right off the bat, I'm always going to ask, what does your emergency savings look like, right? You
Okay.
should have at least 30 to 50% of your emergency savings in cash. Anything additional to that, then you should slowly start tapering that and then letting it flow into investments. Why do I keep saying that? Because the thing with investments is that we can't predict when the market's going to go up. We can't predict when it's going to go down, right? So for any reason, if you needed money due to an emergency, you can't just sell it off if the market's doing bad, right? Let's imagine back in March when COVID first happened, the market took a huge dip. We're talking like significant losses, right? So imagine if you were aggressively invested and you needed money that moment, you'd be forced to sell at a loss, and that's what I try to avoid for everyone, right? Same with 401ks. If you're saving everything into a 401k, then you're forced to take a loan from the 401k, and that's just not ideal because when you take a loan from the 401k, essentially what's happening is you're paying that back with after tax dollars only for it to be taxed again when you withdraw it when you retire.
Mhm.
So it's not efficient, right? So that's why emergency savings is so critical. And I understand, 30 to 50% of your annual expenses. I say annual expenses, by the way, not annual income, because everyone's spending habits are different,
Mhm.
right? I understand that financial planning is very tailor made. It's never a one size fits all kind of thing, right? So that being said, make sure you have the 30 to 50% emergency savings, and if you don't, start building that. Right, that's going to be your number one priority before you start investing. Because, like I said, it's just too risky to have all your money invested without an emergency savings fund in case for any reason you might need it. Right, due to a job loss, layoffs, whatnot, anything could possibly happen.
So you mentioned stocks.
Yeah,
You said, and I hear this often, which it's true, right? Like you can't predict the market. Where
exactly.
in March, that was a great time to buy. The
Great time.
dip, that was
Absolutely.
the biggest dip in who knows how long. So
Exactly. Exactly. And it was due to COVID. So it's like, as unless COVID is here to stay, the market is gonna eventually go back up, and which it did, which is crazy, right? It
mhm,
went up during COVID, so one can only imagine what it's gonna look like when the economy opens back up. However, there's a lot of fear right now because interest rates are at all times is it's zero right now, essentially because there's just because of COVID, everything's shut down. So the government has interest rates at zero. If interest rates go back up, you never know. The economy could potentially hit a recession or whatnot, right? And it's gonna come. It's a bubble.
how would you advise for someone that does want to get into stocks? Because that that was new to me. I learned a lot actually in the last year when the dip happened. So I wanted to really like trying to get into it, and I started speaking to brokers, stockbrokers, do the research online myself,
Sure, yeah.
listen to a lot of these YouTubers, stockbrokers. So then to 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 be able to take advantage of situations like that, and also like when, because we can't time the market, and right now it's back up.
Yeah.
I put in my money now, and if it drops again, then that means that I'm going to be at a loss, right?
Yeah, but think
So,
of it
so
from the
yeah,
long
so
term perspective.
that's why I wanted you
Right.
to get at. So
Sounds good. Sounds good. Yeah. So, I think the biggest I see a lot of people, especially people around our age, they're like, "Oh, I want to." They have a Robinhood account, right? And are you familiar with Robinhood?
everyone was on that hype machine around
Everybody is,
that.
right? And that's the problem because the problem with Robinhood is it encourages a lot of young investors to pick and choose individual stocks, which I see it as a huge risk if they don't understand how investing works. You keep in mind, like a lot of people who I work with who are younger, just out of college or got a college or before or now, they started, working after 2011, which, you know, ever since 2008's financial crisis, the market dropped 37% in 2008, right after this, the financial crisis. Ever since 2008, the market's been up every single year until 2018, which it dropped 4.38%. And then after that, in 2019, the market went up 31.49%. That's huge,
Mhm.
right? So, if you look at it from that perspective, the market, it in a long period of time, you're not going to lose money, right? It would take an absolute, zombie apocalypse, or let's say the S&P, U.S. economy would have to crash completely for you to lose all that money in the S&P 500 index. Why? Because the S&P 500 index is 500 of the biggest companies in the U.S., and that's what the index is um, tracking,
Mhm.
right? So if you think about it, the U.S. economy is the biggest economy in the world. It's not likely that these 500 publicly traded companies are going to go completely bankrupt overnight. So if you look at any 10-year period in the market, the market's never been negative. Even 2000 to 2010, you didn't make any money. You essentially broke even, but after that, your money shot back up. So that's why timing to me is the risk when it comes to investing, not necessarily market risk, because the market's going to go up, it's going to go down. You just don't know when. So that's why timing becomes critical, right? So for people like us who are younger, we're not going to retire for at least another 20 to 30 years. So we should be aggressively invested as aggressive as possible, but also take into consideration our stomach for volatility. Because if you can't stomach the losses, then I can't put you in an aggressive portfolio. Because if you're the type of person to just go online, log into your 401k, all of a sudden you see a negative $20,000 and you freak out and you sell everything, then essentially it's not going to help, right? But versus the advisor is always going to try to tell you, just stick with it, you're going to be fine. And and make sure when you're investing, especially in your 401ks and your retirement plans, don't do individual stocks. I just think it's too risky, right?
Mm.
Everyone's like, oh, I gotta buy Airbnb because it just IPO'd. I gotta buy Tesla because they just did their stock split, right? Same with Apple. Everyone's
Obviously,
all about that,
yeah, yeah, yeah.
right?
Well,
But
Tesla
Tesla, sure,
still
it shot
super
back up.
expensive right now.
Tesla's really expensive, even after the stock split, right? Their stock shot up.
Mhm.
But it's like you got to think of it from its perspective. Like I had a client recently where they were like, "Oh, can you help me buy a bunch of Tesla stocks?" I was like, "We should probably not put all your money into it. We should put some of it, but not all of it, just because so we can capture some of the gains if it does go up. But also understand that we had no there was no predicting whether it was going to go up. It was a 50-50 chance, right? Because you have all these financial gurus on media saying, "Oh, Tesla's going to go up." Then you have the other half saying, "Oh, it could potentially crash." How are you supposed to know? So luckily Tesla did go up. Now I look great for my clients because we put some of the money in there. But imagine if it didn't, right? So I can't just tell you to put all your money, and they have to understand it from my perspective as an advisor. I can't put you in that much risk, right? So that's why I love putting people into, ETFs, which is electronically traded funds, right? You can buy it on Robinhood. Instead of buying individual stocks, I'd rather you purchase an ETF, right? And through the ETFs, you're essentially investing in the S&P 500 index.
What's the acronym for ETF? Just to
So it's ticker symbols. I'm not quite sure how to explain acronym. Let's see. Ticker symbols is when you go on Robinhood, right? You know how you put each stock has like a different ticker symbol. So for example, I'm gonna pull up my stock app real quick. Apple is AAPL, right? Disney is DIS, right? So that's the ticker symbol of each stock. ETFs, on the other hand, I'm gonna pull up one real quick that's good that I like.
Mhm.
Now, also understand, I'm not making this as a recommendation. I'm just
Yes,
telling
yes.
you just
Yeah,
right,
we're just having, yeah.
exactly, yeah, yeah. Just for me to make a recommendation, I would have to understand your situation before I do that, and
Of course,
I
of
would
course.
never make a recommendation unless I understand your
You want to
situation.
make sure you buy the right stocks too, right? Because I've heard, meaning the name, and we can get to some of the top stocks that, so we can talk,
Yeah,
we can recommend. But then
exactly.
I've heard online where someone bought the wrong stocks because they thought it was this one, so they bought, you know,
Yeah, that
some of
happens
the
all
wrong
the time. That happens all the time.
ones.
But that's what I'm saying. Like, avoid buying individual stocks unless you're at a place where you have your 401k maxed out, you have your, let's say, your Roth IRA maxed out, right? You have all these things put in place already, and now you just have extra money lying around. You want to invest, then I'd be comfortable with you investing in individual stocks. Otherwise, I'd avoid it and tell you to invest that money into ETFs or mutual
ETF.
funds.
And then you were going to say ETF again. You were
Yeah,
going
so
to ETF.
ETF is it just stands for electronically traded funds. Basically, it's like a mutual fund, but traded in the form of a stock, right? Because you can't buy mutual funds and on Robinhood. You can only buy stocks, individual stocks. So ETF is a way where you can invest in a mutual fund form, so to speak, but as an individual stock, right? And one of the good ones is Schwab US Large Cap, right? Growth ETF, and I think the ticker symbol is SCHG. And so if I pull it up right now on Robinhood, let me see real quick. The 1 year return from January 31st, 2020 to January 12th, 2021 is 34.37%. That was the return last year. That's crazy.
34%. Oh,
32.04%
oh,
return
32.4. Oh my.
just from last year through COVID.
Wow.
That's insane. And so it's like then if you so I'm gonna pull up something else too, like individual stocks, right? So I'm gonna pull up say give me 1 second. So I'm gonna pull up Netflix, for example.
Sure.
January 22 to January 12, right? So Netflix last year through COVID, and keep in mind Netflix was doing really well. Why? Because everyone's doing Netflix right now because of
At
COVID,
home.
right?
Hmm.
So Netflix last year from January 22, 2020 to January 12, 2021 did 51.61%. So the reason why, even though Netflix did better, it's like, oh, everyone should invest in Netflix. That's what they're saying now because they're like, well, you obviously know the history. But at the time, would you have put all your money into Netflix? And I would have not. I would never allow that because it's just too risky for one company versus the S&P ETF index fund. You're invested in all 500 companies,
Got it.
right? The likelihood of you losing all your money is relatively small compared to investing everything into one company just so you can get an extra 20% doesn't make any sense to me.
So when you said 32%, that's much better than, let's just say, an Apple return where, right? Because that
Yeah,
Apple,
So I can pull up Apple. Apple did even better, right? If we look at the 1 year mark for Apple from January 20, let's see, 22 to January 12, Apple did 62%. So it did even better. All right. So this is what kind of what I'm showing. I don't know if you guys can see that. So I just pulled up Apple on Robinhood.
yep, I can see it.
Right. So yeah, so you can kind of drag your finger across to see what the returns are for that particular,
And
time frame.
everyone, that probably had a lot to do. I'm not saying Apple is great, right? I have a lot of Apple,
Mhm.
and I'm sure the pandemic caused a lot of people to buy uh, devices and stay home and
Oh, definitely, definitely.
yeah, 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 yeah.
Definitely. There's so many moving parts to it because there's like China, there's like Apple's international. There's so many things associated with it. But at the end of the day, I'm not saying don't invest in Apple. I'm saying invest in ETFs because it's going to put you in a much more diversified position than let's
Okay,
say an individual stock, right?
okay.
And you can do that on Robinhood, and that's what I'm seeing. A lot of people is they're buying all these individual stocks on Robinhood and forgetting that they can purchase ETFs. And I'm over here like, you know what? You don't have to you don't have to build your own portfolio. You can just have an ETF, and I think you're going to be completely fine.
So that's some great insight that I had no idea of. So thank
For
you
sure.
for
I'm
that.
glad.
And
Absolutely.
then yeah, yeah. And then you mentioned two things that hit home in the beginning and just a few minutes ago, where you said invest in the long run,
Yes,
because we are in a world of instant gratification where we
definitely.
just want to get those likes. We just want to
Yeah.
see that heart or whatever on the Facebook post or whatever like that. So to tell everyone and myself, like, patience is a virtue,
Mhm.
right?
Definitely,
That's what you're saying.
definitely.
Because there's times where when I looked at it and I'm a complete noob to it, and I was like, oh man, it dropped. What the
Yeah,
hell? So it got me kind
nerve-wracking.
of, yeah, yeah, yeah. So I was discouraged, but then I see now that it went back up.
And that's the experience that comes with investing, right? And, because so I work with a lot of software engineers too, and they all think they're the smartest people on the planet because it's like their portfolio has been doing really well. They've never experienced the 2008. They've never experienced the financial crisis of 2000. So they're like, well, my portfolio is doing 30%. My portfolio is doing 20%. Keep in mind that's highly unsustainable, right? Because they haven't experienced the loss yet. So if you look at the average S&P index, it averages usually in the long run about 7 to 8%.
Mhm.
So just because you got a 30% last year, it doesn't mean anything unless you're selling it and realizing the gains, right? And at which point, if you're selling it this early, you're probably not making that much money anyways, because 30% of $1,000 is still only $300.
So let me ask you this though. What about these things called recovery stocks? What I know you said ETFs is the
Yeah.
way to go for you. That's what you prefer, but let's just say someone that has these thoughts like, okay, maybe this is going to bounce back, where we're talking about airline,
Mm.
cruise lines, the Disney, right?
Yeah, yeah, yeah.
Theme parks have been down. So some of
Sure.
these rental like Hertz or something like that, where
Yeah, like Delta
stocks
Airlines and all that.
it's
Yeah.
pretty low right now. So
Super low.
what
Yeah.
would you say about someone looking to invest in that? in those?
So again, also make sure that you have your 401k, your Roth IRAs, all these financial foundations set up first before you decide to invest in individual stocks. Because again, even though a company's this big, this pandemic has been longer than expected, and who knows what the financial backing of these companies are, right? Who knows if they're gonna have to file Chapter 11 bankruptcy or whatnot. So these are things that are uncertain. But now, is it an opportunity to buy? Absolutely, because if you look at Delta Airlines, they're a huge company. United Airlines, it's like the chance of them going completely bankrupt is we don't know if that's gonna happen or not, but likely they're either gonna get bought out or they're gonna get a bailout, right? But as of now, it's just so uncertain. I wouldn't put a lot of money in there. I would put,
Mhm.
money that I don't need in there. Because when it comes to your 401k, when it comes to your retirement plan, that's money that you absolutely need for your retirement. So I would not take significant risks in those accounts. I would stick to my mutual funds and ETFs. Now, with excess dollars on a side that you're trying to take a speculation for, or take some risk for, go for it. I don't see why not.
Okay, so I want to get to the 401k part, but I just quickly, when a company, just for myself, because I didn't know what happened. I did some research and I'm still a little iffy about it. But what happens when a company goes bankrupt and you're invested in that company?
So when a company goes bankrupt, they have to pay back their bonds and their debt first, right? So stockholders have last priority to shares.
So they
So if
may
you're a
not get it.
stockholder, they may not get it. They may not get anything
Oh my God.
because they're filing bankruptcy because they have to now liquidate all their assets. They have to basically pay back all their debt, and sometimes they're not even able to pay back the debt. So stockholders usually don't get anything if the company does file bankruptcy.
Okay, so be very careful if some of us, the one that's looking into some of those companies where.
Exactly, exactly. And that's why I keep telling people ETFs. I keep going back to it because the likelihood of all 500 companies going bankrupt is very small.
Got it.
Yeah.
And then with ETFs, now you're on that. Is there a percentage of 500 companies? Because let's just say you buy $1,000 in ETF
Yeah.
and there's 500 companies. How is those broken down into that ETF?
So you have an iPhone?
I do. I do.
Go to your stock app, right? This one right here, the stock app right there.
Yep. I got it.
Perfect. Click that for me. And then you're gonna see the first one you should see is Dow Jones, right?
Hmm.
Right below that, do you see S&P 500?
Hmm.
So that's the index. Now, there ETFs, there's going to be multiple different ETFs from lots of different companies, and what they're doing is they're basically taking companies in the S&P and investing in it and creating their own mutual fund, so to speak, right, in their ETF. So if you buy like a Charles Schwab ETF or whatever ETF created by certain companies, it's not going to have all 500 companies. It's going to have whatever the money manager thinks is appropriate for that particular fund,
Got it.
right? So, but if you want to invest in just S&P 500 index, which is tracked every day, through the S&P index, then you can just go to Vanguard and then just invest in their super low cost, S&P 500 index funds.
So
And
I
essentially it just mirrors the S&P index.
so I see here that Dow Jones is negative and but the number is higher. So why would someone go Dow Jones or go S&P 500 instead of Dow Jones?
So Dow Jones is just the entire US economy. It's a S&P 500 is the mutual fund or
Got
index you can invest in. This just basically shows us, what the direction of the US economy is going.
Okay, good. I'm just looking at some of these plus and minus now that you're like.
Yeah. So I
So,
mean, I don't like looking at daily plus and minuses, right? Just because if you look at it, it's just going to stress you out. If it's your 401k or your retirement fund, or Roth IRA, traditional IRA, doesn't matter. Anything that's related to a retirement fund, don't even look at it because keep in mind you can't touch it until you're 59 and a half anyways. And the reason why 59 and a half is because if you take money out of your 401k or any kind of pre-tax or post-tax retirement fund early before you're 59 and a half, the IRS is going to penalize you 10%
hmm.
in addition to taxes that you have to pay.
So 59 and a half. So 401k. Now, I have heard from people that is not something where you should be extremely invested in because they say that, hey, it's not because of inflation or because of a number of reasons, and also because maybe you can do something else with that money. Now,
Yeah.
I mean, advice on
Good
that?
question. Very good question. So, let's see. Right off the bat, if your company matches, take advantage of that. That's free money, right? A lot of companies do what like a dollar for dollar match or 50 cents per dollar match up to 3 or 4% of your total income. If that's the case, you should totally put at least that amount to get the full maximum match, because that's free money. And but however, also there's a catch to that, because if you don't plan on staying with that company for at least 5 years, because most companies have a 5-year vesting period. So if you plan on leaving after 1 or 2 years, then it wouldn't even make any sense to put money into a 401k, right? I'd rather you open up a Roth on the side, Roth IRA, and then invest in that, assuming your income limitations qualify. Because if you make too much money, you're not allowed to put money into a Roth IRA. You can only put it into a traditional IRA. So yeah, that being said, 401k, if the person that I'm working with, let's say a young person, right? Let's say in their 20s or 30s, right? And they're just starting to invest and they're like, well, I have a 401k. A lot of times we tell them, if you don't have emergency fund, that's your number one priority. Number two is, you want to take advantage of Roth IRAs. If your company has a Roth 401k, perfect, take advantage of that, right? But otherwise, keep in mind, if you have student loans, all these other things going on, it might not make sense for you to put all your money into 401k because you can't touch it until you're 59 and a half. So if you're trying to buy a house, that's even more of a reason to save more in cash. If you Google retirement planning, the first thing that comes up is like, oh, everyone should like invest and save for your retirement, max out your 401k. I think that's just very irresponsible advice, because they're giving it to the masses
Mhm.
and everyone believes in that. I think it's just mutual fund companies, pushing their own agendas because they make more money when more people invest in 401ks.
Got it. So
Yeah.
I heard you say cash, liquidity,
Hmm.
your investments, stocks. There was a craze a couple years ago, and it seems like it's picking up. But what are your thoughts on cryptocurrency and
Oh my
Bitcoin
God.
for your clients?
Yeah.
You're selling
So
for your clients, so
so I wasn't even able to talk about cryptocurrency because it wasn't a registered security. It was illegal for us to talk about it. Right, because it's not covered in our license. It's not covered in our E&O stands for errors and omissions insurance, right? In case of, like kind of like doctors malpractice insurance,
Mhm,
right? They cover you in case of a faulty advice or something that was negligible on our end. So cryptocurrency, I mean, again, it's so risky. If you look at recently, it's been fluctuating like crazy, and all of a sudden now I'm hearing news about crypto. I think it was like at 38,000 for Bitcoin, right?
mhm,
So it's insane. Like I think I was just playing with it for fun. I put like $500 in it a long time ago. I think Danny got me into it. He was always talking about it, right? So he got me into it a few years ago. So I put like five, or I think about at most $1,000, $1,200 in there. And I look at it now, it's at like $3,500. So I was like, oh, that's cool. But it took 2 years. At the same time, it's significant risk.
mhm,
And to me, it's just, if there's money that you have lying around that you don't need, you don't need this money anytime soon.
mhm.
I would put some in there just for fun. So I've heard people take out loans from their 401k. I've heard people take out credit card advances just to put into crypto. I think that is
Or people
so,
take out thousands of dollars. Like I'm talking
yes,
about multi thousands.
yes, that's terrible because that's just too risky. Now, understand, if you do that, you better prepare for the consequences if it doesn't work out.
Yeah.
At that point, I can't even help them. Like, there's nothing I can do.
Yeah. So for someone that is having some challenges, because you speak to some family members, friends, or some people that you know well, right? They're telling you, but then they're having some challenges with their savings or with their spending or just managing money. What's something that what's some advice that would you give them? I know you said that try
Yeah.
to game plan it, but just something that you would tell
Yeah,
them.
yeah. So you remember Kevin Hart says, like, remember that joke he says, like, I got to check in the savings. It takes 33 business days before I can transfer that money over or something like that.
I
You
don't
ever
think
watch Kevin Hart?
I
He
know.
did.
I definitely know Kevin Hart,
Yeah,
but
yeah. He did one of his stand-ups. He was talking about how he was hanging out with Dwayne Wade, and he was like, it's just a stand-up, and he was like talking about, I can't hang out with athletes because they're on a whole different another level, right? In terms of balling status, right? And so he was talking about he went to Vegas, he spent hella money, and then the next day he called him back. He's like, "Hey, we're gonna do it all again." And then he was like, then he would start explaining his financial situation. He was like, "You ever been in a situation where you have to start explaining your financial situation to somebody?" So he was saying, "I got to check in the savings. It's gonna take me 2 to 3 business days to roll that money over, so I can't really go out with you tonight."
that's so funny.
But it was a hilarious. It was one of his stand-up. I think he was doing it in Cleveland, right? So if you guys have some time, that's one of my favorite comedians. So you guys should definitely check him out. But I relate to that because I was like, well, if you're the type of person that spends every dollar you have in your checking account the moment you see it, open up a savings account,
Mhm.
right? Open up a savings account and force yourself to save. whatever you can on a monthly basis. So whether that's $100 a month, whether it's $500 a month, it depends on your own situation. But make a conscious effort to continuously do that, because again, money spending is a habit. If you see money in your checking account, you spend it. We're gonna have to figure out different ways for you to not spend it, because, or just figure out a way to control your habits, right? Create a spreadsheet, create a cash flow worksheet, and see where your money's going. And then when you see it, everything from a kind of organized standpoint, you're like, holy crap, I'm really spending this much money, right? Like subscription, Netflix, Hulu, there's all these subscriptions. Sure, Netflix is only like 10.99, or I forget, like 13.99, whatever. Hulu is like 5.99. But all these things add up. And all of a sudden you're like, what the heck? I'm spending $100 a month on just subscriptions that I barely use. Stuff like that. So it's
A lot
important
of
to track
unnecessary things too that goes
always.
in it. Yeah.
Yeah.
What about people with debt?
So
What
there's good debt and bad debt.
I'm speaking about bad debt right now.
Okay.
Yeah.
Okay.
So whether it's school loan or well, I don't know. School loan could be a bad debt if
Yeah, no,
yeah.
take that up. You're making yeah, for sure. So bad debt obviously is credit card, right?
Yeah, that's where it's credit cards,
Mhm.
car loans, because a lot of times people are trying to get the new latest car.
Yeah, yeah.
You drove a car for 2, 3 years, and then you want to go buy a new car. To
Exactly.
impress who?
Exactly.
To impress someone that you don't know?
It's always like that, right? You're always trying to impress people you don't know, because that's just what we do.
I know it takes a lot of self-control
Yeah,
to not care as much. Well,
exactly.
as human beings, we all care
Exactly.
in some extent, right? But then
Yeah.
not care as much. But yeah, so let's just go right off the credit card debt.
Yeah, credit card debt is the worst debt you can possibly have. That's why credit card companies offer excuse me, offer, balance transfers, 12 months, 0% interest, because they know once you once you have the balance transferred over, if you're unable to pay it, then what makes you think you're going to be able to pay it in 12 months unless something drastically changes? And they know this. So they have all these people doing these balance transfers for 0%, and then 12 months is up, that interest usually shoots up to 24%. So if you think about it, that's like 2% per month. That's a lot of money. I mean, geez, like that's just $1,000, 24%. That's $240. That's a lot. Now multiply that by average person has about what 20, like 15,000 credit card debt. You're paying all that in interest, and that's what it makes it harder for people to even pay that off. If you're just paying minimum, it's going to take you 30 plus years to pay that off, right? So that's terrible debt. And whatever you can do, if you have credit card debt and you're unable to pay it off, I highly recommend you go to your local credit union, or the reason I say credit union, because they're a nonprofit,
Mhm,
right? Versus big banks, they're usually for profit. So credit unions can usually give you the best rating, interest rate possible. Go get a personal loan.
mhm.
If your credit card debt is that high, usually you're gonna have bad credit. Hopefully the credit unions will approve you, and oftentimes it's going to be significantly lower interest. So for example, if your credit is good, it can even go down to like 3 or 4%. If your credit is bad, and sometimes it can be 11 to 12%, but that's still way better than the 24%, right?
And if eventually where sometimes a lot of times, not sometimes, where the credit card debt gets too high, and then eventually people can't pay it anymore. They may have two, three, four, even five
Yeah,
or so, and they get
exactly.
charged off, and it ruins their credit.
Hmm.
Ruins their credit, and then they may be need to file for bankruptcy. That ruins
Exactly.
their credit even more.
Yeah.
So that's something that I encourage others to, like, hey, don't don't get into bad credit card debt. Of
Yeah.
course, other things too, but then credit cards is easy, right? Because you can apply for it when you're 18
Exactly.
at these all these different places, and they send you things in mail all the time too.
Yeah. And
Hey,
they don't even verify your income. You can just say you make $100,000 and they'll give you a certain credit limit. And how are you going to pay that off? It doesn't make any sense.
yeah, it's that you just want, and it's someone brought it up where it's like it's not the dollar bill where when you're giving someone 100
Yeah.
or five thousand
Exactly.
dollars, and you're kind of like, oh, I don't want to get
Exactly.
that.
Yeah.
When it's a card, it's just you can't. It's just right there, and then
Yeah. Just
you look
swipe
at
and that's it.
you
Yeah.
look at the activity. Well, now it's cool. You don't even have to swipe it in some of these retailers. You
Yeah.
just tap it.
Exactly.
Yeah. So it's even
It's like you
better.
said, instant gratification, straight up, right? It's just we swipe now, we'll deal with the consequences later. We don't even have to pay it for at least a month before it starts
And I
accumulating.
also think too, I think as we get older, we kind of step away from that. But as younger people, and back then too, where if someone has a credit card and a like a black American Express card or something that looks nice, because these credit card companies, they're smart too. They
Really
make it
smart.
look nice and pretty.
Exactly.
So then you're like,
Chase Sapphire, right? It's a metal blue card. It looks beautiful, and it's
yeah,
like,
yeah. So
not
you're showing off, swiping it, trying to like slowly. Yeah,
exactly. Just make sure someone catches an eye,
yeah,
right?
yeah. Oh no, let me use this card.
I
Well,
mean, don't
now,
get me wrong, the points are great, but I catch a lot of people say like, "Oh, I get points, so I'm just gonna spend this." But don't ever spend it for the points because the points are worth very minimal compared to how much you're spending for it.
how I say it is, if I'm going to be buying it, if I'm going to a store, I'll use it, right?
Yeah,
To buy whatever I need to, but not to try to take advantage of the points, right? I'm just gonna
exactly,
use it for whatever I need to purchase with, and then
exactly,
the points come along with it. So
exactly.
yeah, yeah.
Yeah, I think that's really important because people get carried away with it, and so they're like, "Oh, I have all these points. I want to keep building my points." But never. I mean, you should only use a credit card if you're able to pay it off every month.
Mhm.
I think that's the only thing you should do with credit card. Never ever put a balance on it unless because credit cards is for emergencies, right? Let's say you don't have emergency funds. You let's say you have a $20,000 credit card balance you're not using, but medical emergencies, anything like car breakdowns, you need to fix your car, it costs a lot of money. That's when a credit card becomes useful, and you want to pay it off as soon as possible. Don't ever let it accumulate if you can.
Yes.
Yeah.
So now you brought it up. You said good debt. So
Yes.
let's hear about that.
Yeah, okay. So, well, let's start with student loan because student loan is kind of the gray area, right? Is it good debt or is it bad debt? Because, like, if you're going to school and you're gonna become a doctor, you're gonna become a lawyer, something that's gonna come out and give you a high salary, then I'd say that's a decent debt, right? But I mean, I don't want to. I don't want to shit on like all the other careers and whatnot. But I'm just saying, like, if you major in, let's say,
Nice. No, I'm just kidding.
I mean, because my parents like if I told them that I was gonna major in art or English, they would kill me. Like, you're not gonna make any money, right? So it's like if you invest in
That's
that and
when someone says they follow their passion.
exactly, and if you follow your passion, I hope you figure out a way to generate income, or I hope your parents are rich enough to support you because otherwise it's gonna be
Most
difficult.
most of, most of the time, it is like that. They're
Yeah,
rich
yeah,
enough
exactly. It's always
to.
like that. They did a study with a generation, right? It's generation. So, for example, my parents' generation were immigrants. My mom immigrated here, and so she basically was the hardworking, gave us a better life in America. And so she doesn't have any education. So, our generation, we're like the lawyers, doctors, teachers because our parents were like, "Oh, you got to go to school, you got to become a doctor or whatever," right? So the problem is, our kids are going to be the passion finders because right? So we got to make sure that they're not chasing their passion. You got to chase the living, right? So I mean,
I'm
that's
I'm
just being
not I'm
practical.
not rich, so I can't be funding their passion. So
I know, right? That's insane. So if we ever get to a certain level, right? It's like if we do become wealthy, then it's like, yeah, our kids are gonna be the passion chasers because they don't have the financial, burden, right?
that's
So
actually good. That makes actually good sense. Yeah, that
yeah,
I have heard that from a lot of studies where the first generations, they are very well, not talking about our parents that immigrated here, but the first generations, a lot of them are very hardworking individuals,
exactly,
and yeah, so
exactly. Then we have the lazy generation next, entitlement and shit like that.
I'm seeing that, and whew,
Yeah, that's
that,
crazy.
that bothers me.
But sorry, I didn't mean to go off a tangent there,
No,
but
no, no,
just
no.
wanted to bring
No,
that up.
hey,
But
that's what this is. It's a conversation, bro.
for
So don't.
sure, for sure. So we were talking about good debt, right? Let's see. So good debt, like mortgages. I think mortgages is a great debt. Why? Because when people are renting, you're paying someone else's mortgage, or and you're not building any equity. So when you get into a house, right? For example, when I look at San Francisco, I'm like, people are paying $4,000, $5,000 a month for rent. Holy crap! You know the kind of house you can get? You can probably get like a $800,000 mortgage for $5,000 a month. Right? I don't know the exact numbers, but you can always go to like Google calculator, bankrate.com has a great mortgage calculator and start playing around with it. Because once you start understanding that, oh, this money that I'm paying for rent can go to a mortgage, mortgages are great debt because you're building equity. Now, obviously, don't buy a house that's outside of your means. Make sure that you're buying a house within your income limitations, right? You're not, because the banks, they make a mistake of approving a loan higher than what you're able to afford because they just assume that you have no other expenses except this mortgage, right? That's terrible. And that's how people end up foreclosing. But make sure that you're not spending over your limit, and mortgages is a great debt because if you think about it, when you're paying your mortgage, you're paying down the balance of the mortgage and you're building equity. So each dollar you pay into it, you're now building more and more money on the house that's being paid off. So the house is not a dead asset, it's going to keep appreciating. So as it appreciates, it's going to be a great supplement to your retirement because you can either take equities loans from the home, but there's so many different ways you can spend this money, right? You can either sell it in the future or whatnot. but it's again, it's your money, it's your asset, right? That's a good debt.
Mhm.
Does that
Yeah.
make sense? Kind of?
No, no, absolutely. I agree. I have had some experience with that, and but then just what you said, where if you can build equity, you can build an asset and create wealth, then that's a good debt. So
Exactly.
yeah,
Exactly.
yeah. But so I was just gonna say that. Can you believe that it's been about an hour already?
Yeah, right. That's I looked at the time. I was like, man, that time flies.
I told you, time
Sure.
flies when it's just going. So,
Wow.
just a few things that thanks for sharing all that stuff. And as I mentioned, I want to continue this conversation, and we can bring in some charts and some graphs the next time.
Yeah, that'd be great.
But
Yeah.
I just wanted to ask you, like, what are some interests that what some things that's going on in your life when you're not working, or not transitioning to your new
Yeah.
business. What are some
Oh man,
fun?
I, I love snowboarding. I love basketball. Just COVID right now has really put a wrench in all that, right? Because just man, I can't play basketball. They took down all the hoop baskets in
Mhm.
all the parks. There's nothing you can do about that. But honestly, like, and when I'm hanging out with people, people always ask, what you do, right? Just when meet new people, and to me, it's like I can be working anywhere, but it doesn't feel like working because I'm just explaining to people what you should be doing with, your finances. So to me, even though it is talking about my work, it doesn't feel like work. So I'm always happy to talk about it. But outside of that, interest wise, like I'm always I love hanging out with people. I love drinking, trying to cut down on it because too many calories so we can lose weight, right? So I love eating. Definitely love eating. Daddy knows that.
So I was just gonna ask you. So now you mentioned that you love basketball and snowboarding. So I mentioned this to a few other guys too. Growing up, I love fishing. That was an
Mm,
exploration for me, right? Like
nice. Yeah.
we didn't have the privilege to maybe go to Disneyland or Disney World, or
Yeah.
go to these things. So we would go fishing, we would go camping, and but it's me too, right? But I was gonna say I'm a spectator now. I
Mm.
watch people fish and camp. So are you a spectator now? You watch people snowboard and play basketball?
I'm definitely gonna continue snowboarding for sure. Basketball, I mean, I haven't dribbled a ball since COVID started, so it's only been a year. So I might end up being a spectator just because I'm getting older. But I would love to get back out there and play again. So we'll see. I mean, hopefully things open back up once the vaccines come out, right? People are already taking it. So I look forward to trying to play basketball, but I guarantee you I'm probably gonna be a scrub again. So
I mean, it's like riding a bike, right? The first few times, it's you're getting your body used to it, and then once you get yourself into shape. But so you said that you love well, you were gonna cut out some drinking. Are you exercising right now? Did you
yeah,
get?
yeah. I try to exercise. We have a punching bag, so I've been doing Muay Thai and kickboxing for the last about year, 2 years ago, 2 years now. So we have a punching bag at home. I try to do that and then try to run the lake every so often just to try
Good.
to maintain, and try to lose some weight. But the food is always an issue because like we have Oo coming over on Mondays for watching football, and then we always order, a hell of food because he's hella fat too.
So what's some of your favorite food? Like, I love this question where
Yeah.
I always ask it, right? Because maybe I don't know, it's just one of the things where it's for fun. I'm curious and I want to say what's three things that you would take to island with you? Or three meals for the last day of your life, three meals that you would have.
Ooh, okay. Oh, I'm gonna tell you in just a second, but I just want to mention, yeah, I'm calling Oo's ass out just because he's probably gonna see this. So,
Okay.
but anyways, yeah, no, for three things, let's see, definitely sushi. Sushi would definitely be on top of it.
What
Yeah.
particular role or any
No,
type
so
of
I'm not a roll guy. I'm a nigiri kind of guy, right?
okay.
So I like the
Okay.
omakases and stuff like that.
Fresh. Yeah, okay.
Yeah, yeah. Just man, I love that. So I can eat that stuff every day. I don't care if I get mercury poisoning.
Well, I mean, you're fine. You're still good. So,
Yeah, exactly,
but no,
right?
I was gonna joke around. So you know how they say there could be worms and those.
Yeah, yeah.
That's probably why you like to eat so much because
Honestly, if I had worms, I'd be skinny. I'll tell you right now. So
you're eating so much and you're feeding the worms. So
true, true. Yeah, exactly. My worms are picky too. They probably only like good quality shit.
yeah, yeah, yeah.
Let's see. Next thing would definitely pizza. I love pizza. Man, pizza is up there for sure. And the third one, he gave me three options. I'm a big foodie, so it's like it's
No,
hard.
no, 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 no. You can never pick three, right? It's just
Yeah,
I mean three off the top of your head. But what kind of pizza do you like?
New York style pizza. I was in New York in October, and I just ate pizza almost every day. It was great. I had a great time. Gained a
Nice.
lot of weight, but you know,
Hey, you enjoy it, come back and get back to the
exactly,
grind. So you were on
exactly.
vacation, so
Yeah, and I don't like those combination pizzas. Right? I like some simple, like a margarita or like a grandma slice or something like that. Just something simple, you know.
it's the cheese and the bread. That's what
Yeah,
you yeah,
exactly.
and the
If you think
sauce.
about it, it's like just adult cheesy bread. It doesn't. It's like kids food, but for
Yeah.
yeah. And then I love Chinese food. I mean, like Sichuan food specifically. I like spicy food.
Mhm.
So
So I I in 2018, I was on a sushi hype. I
oh
didn't I didn't eat too much of it growing up, right? Because it's like I was usually a meat and potatoes guy where, I just need a lot of protein. And
yeah,
but then in 2018, for literally, I'm not kidding, I'm not exaggerating, for about 7.5 months or so straight, I had it almost every weekend.
wow. Where'd
Let's
you go?
let's just say places around my house. I'll rotate 2 3 places or so. Um, Sometimes I'll go with whoever and where we may be at a different city, but nowhere in specific. Just I would say maybe the one closest to my house, but then let's just say twice a month. I was having it for 7 months, 7 to 8 months.
Wow.
So I was like, man, this is so, like I was just on it.
Yeah.
But I haven't had it in a while. I don't, yeah, it's been a while since I've had it. But
What's
no,
what stopped you from going back? I mean, would you just all of a sudden say I'm done with it, or
no, I would just, I don't know. I really enjoyed it at that moment. And don't get me wrong. I still enjoy it now, but it's
yeah,
just,
yeah.
I don't know. Maybe, like I said, I was
A
just on
phase.
that.
I get what you're saying. It's just a phase. Yeah,
Yeah, yeah.
yeah.
You're right. Just, I did roles more often.
Mm.
The only time that I would do other things was maybe if I went out with someone.
Oh, I see.
But then usually it was just I would just get some like two,
Yeah,
three rolls or so.
yeah. I'll do rolls because again, like when I'm eating just the omakase, just the nigiri, the fancy stuff, I'm not full afterwards, so I
Yeah,
have to get some rolls. But sometimes when you go to like an omakase place, they don't have rolls, right? So if I'm going to like your typical sushi place that has rolls, I'll order my nigiri and then I'll always order a few rolls just because the thing you hate most is leaving a restaurant hungry.
yeah, 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 yeah. No, no, no. I think that's one of the things why when I was young, because okay, so I grew up and since I was in my mid-teens, I've been working out. So it's all about trying to get in
Macros.
macros. And
Yeah.
then, of course, when you get to a bulking stage or whatever, you want to get a lot of protein and food. So you're like, man, I can't eat a sushi roll, man.
Yeah. Exactly. Yeah.
I
Yeah.
need to go eat a burger or a burrito or something, you know?
Yeah. Well, I mean, the fish has a lot of protein in it, so it's
No,
like
it
it's
does, but
pretty
it's
clean.
it's like a tiny piece, and
True. True.
it's
Yeah.
more expensive, right?
Way more expensive. Yeah. Exactly. Definitely.
Yeah, but no, I love that. You gotta enjoy yourself,
For
but
sure.
of course through a moderation, right? So what I do now is I would eat out like fast food here and there. I would say, and depending if I have something going on, right? So for example, if I'm maybe gonna take some pictures or something with showing my physique, I'm not gonna want to eat too much too
Yeah.
much.
For sure.
But no, I definitely enjoy myself, and Danny knows that I'm a big eater too. So there's times where
Runs in you guys' blood, man.
yeah,
That
yeah, yeah,
dude can
yeah, yeah.
eat.
So I actually eat more than him.
Oh, you do?
I
Oh
do.
shit. That's Oh my god. That's
Yeah,
fucking
yeah, yeah, yeah,
wild,
yeah.
dude.
It's funny because I don't think I know anyone personally. I mean, of course, there's competitive eaters out there that you see, but
Yeah.
I don't think I know anyone personally that can eat more than me if I wanted to eat that much.
Yeah. Yeah.
And I'm talking about big 300-pound dudes too.
Holy
You
shit.
know? And
Why is that? Is it because of your training or you're just really hungry?
no,
Like
I think just since I was young, I used
Mhm.
I always was able to eat a lot.
Damn, that's the dream for me, man.
But the funny thing is that I remember being a teenager in my mid-teens, and the pack of noodles, those mama
Yeah.
noodles, yeah, just
Yeah,
the
yeah.
cooking ones and stuff. I would make like 4 packs in
Holy
my
shit.
mid-teens. I'm no kidding. And I would just eat it. And then I remember a couple buddies came over and then they're like, oh, let me get some of that. And then they took some bites and then they're like, how come it's not going down? Then they asked me, how many packs did you make? I said 4. They were blown away. They were like, and the funny thing is that that was like nothing to me. I was like, this is normal. So,
God, that's a lot of food. Holy
yeah,
crap.
it's funny, but what about any, like, I know, hanging out with friends, that's big to you, but like things that you're interested and curious about, like any, just if whether it's listening on YouTube, watching something or TV or something like do you,
Yeah. Um, Not that big. I mean, I used to play a lot of games, not anymore. Let's see what else. I like traveling. I mean, but COVID kind of put a stop to that as well. I'm trying to think, what do I do on a daily basis? I'm pretty much just working all the time and then just hanging out with my housemates, watching Warriors games.
yeah, yeah, yeah. Okay,
Pretty boring. I mean, with
so
COVID and everything,
the
right? So
spectator, you're a spectator.
pretty much, yeah, exactly.
Yeah,
I would love to play, man. It's like
yeah.
because that's it's just when I'm playing basketball versus actually working out. Basketball doesn't feel like a workout, right? Versus when
You
I'm working
can
out.
you can go out, right? You can go out right now to shoot around, can't you? If as long as you have a mask and you're not too
Mm,
close to people.
So most of the hoops they've taken it down.
Oh, I
In
see,
the
I see.
backboard, they unscrewed the hoop and they take it off because they don't because basketball's a contact sport. You can't play by yourself.
Freak it, you can go just pretend like there's a hoop.
Watch when the COVID ends. I'm gonna try to shoot a basketball. It's gonna be so awful.
Or no, no, no. Or you can visualize and imagine, and then you'll be so good.
There's no satisfaction because like when Curry makes a three, you're just like, oh, that net sound, right?
I know, I know. Yeah, yeah, yeah.
But
Just
yeah, no, totally. I
put
guess the
headphones on. Yeah.
sorry, go ahead. What'd you say?
No, no, I was just joking around. Said put headphones on and just hear that
Oh,
three. No,
exactly.
but you were gonna say something?
Oh no, I was just gonna say. I mean, I just everything I do right now is just hopefully to maintain in shape. And I mean, like I try to run as much as I can, but I hate running. I freaking hate it. Like you have no idea how much I hate running.
So I think that it's it goes back to discipline, right? Like
Yeah,
what's important for you, just like how you mentioned with and the mentality, how you approached it in the beginning when you were talking about financial advising.
yeah,
So we just got to get in our head like, hey, this is something that it's a must do. It's like
exactly,
putting on socks, brushing our teeth, so going out for a run is just like that. Whether if you don't, it's a part of yourself. It's
exactly. It's got to be a routine. It's got to be a lifestyle change, right? For sure.
and
Because
we need routines too, like
yeah,
adult men. I think even no younger people too, right? It's because I'm part of why I want to have this conversation is because I want to reach out to younger people too,
mm,
younger audience too, to like, hey, you need a routine. You mentioned playing games. There's so many games that are, I've been away from games for so long, but I do hear that it gets you caught in to this
yeah,
world.
yeah,
So that I'm just gonna say most people, if they're caught up in that world for 6, 8, 10 hours a day, you're not gonna feel good about yourself afterward.
definitely not.
You're not gonna
Yeah,
feel good about the situation. So you need to use your time wisely. Let's just say maybe 2 hours a day on game.
yeah,
And then maybe on a day off, you can do a little bit more, but you need to have a daily routine where you're active, where you're doing things of responsibility, where you're
exactly.
working,
Yeah.
and then have some fun here and there.
Yeah, it's definitely too easy to get caught in and just play 6 to 10 hours straight, right? Because I've been guilty of that multiple times in the past when I played a lot of games. But I mean, I've always listened to what somebody said. It takes 2 weeks to build a habit, so you just got to stick with it for 2 weeks. Hopefully run every other day, and then you'll become a habit of it. But it's also so easy to get out of the habit because I think beginning of before COVID, that's like last year around I think August or September. I don't quite remember, but it's like me and Danny were running a lot, like maybe 3 to 4 times a week. And because he was doing it anyways, I was just trying to tag along. And after the first couple months, it made it a lot easier. But then I think with the whole fires and everything, we stopped. I stopped running. He was probably still running, but I stopped. And then after not running for about 3 to 4 weeks, it's like I went back to my old habits of not doing it. So slowly trying to get it back now.
Yeah, it's kind of one of those things where I always try to put first. Like I would say, hey, wake up in the morning, do it, make this a priority, and
Yeah,
everything else will fall in place after that. And it
definitely.
makes your day a lot better too. But just one more thing, I know, just want to be mindful of both our times. It's yours too, of course. But just one more thing that you touched upon and that I'm curious about because I plan on doing that a lot more. Hopefully, when the whole pandemic situation shapes out
Yeah.
better for us. But you said traveling.
Yeah.
So, what are some sites that you're like, hey, two, three sites in the upcoming year or next year or so that it's like it's a must.
Yeah, yeah. I definitely want to pay a visit to Hawaii. I've never been to Hawaii ever in my life.
Wow,
I know, right? Because
that's
it's like
one of
right
the
there.
number one
That's what I
places.
said. Yeah, exactly. I've never been to Hawaii, so that's definitely on my list. I love Japan. I've been to Japan a few times, but it's still my favorite country because obviously I love
Tokyo,
sushi.
you
So
go to Tokyo?
Tokyo, I have an aunt I think in Yokohama, so it's
Oh,
like
okay.
mom lived there for like 8 years. We're not Japanese. She was just there as an exchange
Hmm.
student when she was younger. So I've been there. Love Japan, and then I haven't been to China since 2009.
Hmm.
So I
What
would
part?
love to go
What
back.
part of China?
Shanghai. That's where
Okay.
my family's from. Shanghai.
Okay.
So I would love to go back there and visit a lot of family there that I haven't seen in a while either. So
So, of course, seeing family is important, right? Like you want to go to Japan and China, but what about some places where you're like, man, I want to see? Are you like a nature guy or are you like a monument, like
Mm.
anything that catches your eye? Because I've seen a picture of you guys in Rome. Was it in Rome?
yeah, it was Rome.
At the Colosseum? You guys took a picture with the Colosseum and that
Yeah, that was cool and all, but for me, it's like I'm just a food guy, man. Like, just let me go places to go eat. Like,
I love that.
if you want to go sightseeing, I'll be the guy eating while sightseeing. You know, like when we were in Barcelona, we went to Park Güell or something like that, right? So there's pictures of me with Danny and them, and I just had a sandwich and a sangria in my hand while we're just walking around. Just everyone was like taking pictures. I was just eating my sandwich.
I love that. I love that. So some places that I think I know you've been around to some of these places, but where your money goes a long way.
Like Thailand.
Mexico,
Yeah.
Thailand, Vietnam, all those places, and the food. I think that you would probably like some of those food too.
Oh, I
So
loved it. Yeah, when I was in Thailand, I was in Thailand for like a 2 week Muay Thai boot camp, right? So it was awesome. I stayed an extra week after that to kind of tour the city and but the food is cheap. However, the portion sizes were extremely small. So it's like I
yeah,
ended up
because
buying
they're
three or
not
four portions.
pigs like us over
I
here.
know that's the problem. So when they gave me the order of my this like beef plate or something, I was like, that's it. So I ordered like three more. But what I found out was when I asked the lady for extra, like more, I'll pay more. Extra just means more rice. They don't put more like meat and stuff. So I was like, you know what? I'm just gonna order another order. So now I was like, let me just get three orders of this for three different people. So
Love
that's
that.
the tip right there, you know?
But you're like, is this for someone else or something?
And it's like I just need one pair of utensils too, right? So they're like, oh, this is definitely for that one guy.
Yeah, yeah, yeah. So there's times where I went into a restaurant and I ordered two dishes, not
Mhm.
only because I eat a lot, but because I like variety, right?
Exactly. For
And then
sure.
worst case is I'll box it up and bring it home if I can't finish it.
Yeah.
Right? So there's times where like just one instance where I went to order a burger and a sandwich, and then the dude was like the waiter, he was like, "Is someone else coming?" And then I was like, no. And then I went to use the bathroom, and then he was asking them like, is he really going to eat all of that? Or they'll hear I've heard that that's not I've heard it in a couple other occasions too. But then
Yeah.
it's like no,
I can
but
see that being super common for you, especially the amount you eat, right? Because even someone like me who eats a lot less, but every time I do takeout order, like I always order a shit ton of food,
yeah.
and they always put like three or four utensils in there. I'm just like, nah, I only need one.
No, and people think that just because like work out or whatever, they think that you don't eat. Like you
Yeah,
eat, you need to
have
eat.
to, yeah,
Yeah,
exactly.
yeah. So they're like, they probably think like you eat salad and some chicken all the
Straight
time.
up, right?
Yeah, yeah, which I do incorporate a lot of that in my diet, but still, you eat big portions. So
Yeah.
uh, no, that's great. I hope you get to go to some of those. And do you have some time frames when you're gonna go?
No, not at the moment. No, because just kind of see how this whole pandemic plays out, and then we'll play it from there.
Yeah. So I have been to Hawaii a few times. I know you never been
Mhm.
there, but then a couple, of course, Honolulu, Waikiki is where most people go, right? That's like
Okay, that's
the
good to
tourist
know.
place, but Maui
Yeah.
is good too. And I plan on going to the Big Island, which I never been to.
Okay.
Yeah, yeah.
Do you have
But
any recommendations? Like if I ever go, I'm definitely gonna reach out to you for
for
some
you,
recommendations.
bro, for you, you said that you like eating,
Yeah.
like, and you know the attractions might not be big for you. I I would say Honolulu. So
Really?
that's
Okay.
where, you know, Waikiki, where the main tourist area.
Okay. What about Maui?
Maui is neck and neck with that. So,
Okay.
but and if you really want to do it right, so if you're going on vacation, you could spend half of your time at Honolulu and fly to the other one, fly to
Mm,
Maui if you really want to. You know, like a half or so, like maybe 3 days there, 3 days other one. Of course, you're gonna have to put more money, but then
exactly. Yeah.
I think you know a trip in Honolulu for 6 days or so, you'll enjoy your time over there.
Okay. That
And
sounds
you
good. Yeah.
a lot of their they have I'm not too into it, but then they have a lot of people were, oh my God, some of my family members were hyped up on it. It's pokey. Yeah,
Oh
yeah.
yeah, I love poke. I
Yeah,
love
so
poke.
they have good ones over there too, from
Ooh,
what I've heard.
yeah.
I didn't have it. Yeah. A lot of the, you know, the Hawaiian type dishes and things like that. So yeah, they of course, you know, they have good stuff. But yeah, so
Good. I'm like drooling
you'll
already.
enjoy it. You'll enjoy it. You go there, and then I think that I'm not telling you to go, but then I think it's not as expensive if you plan right now to go maybe around mid to late this year.
Mm.
And
That's good
assuming
to know.
that, yeah. So
I
you
got
can,
I got an I got an offer from like I think it was like Westin Hotels or something like that, right? It's like I paid $600 and I get like 5 nights free because of the $600. I was like, I'm totally taking advantage, and this is
yeah,
in Maui. Only
yeah,
catch is they required me to sit through a 2 hour timeshare seminar. They're trying to sell me a timeshare.
you need
Don't
to
have it.
be patient with that. So you need to just be like, because they are gonna be some hard
Oh
sellers.
yeah, for sure. I'm just gonna sit there with my hand on my chin, like this is very interesting. I might consider, like
Yeah, they're gonna call you, so you have to like kind of block their number probably after that. But
man,
hey, bro, this was a great time.
definitely. Yeah.
Thanks for your time. And like I said, let's you know connect again sometime in the upcoming week or
For
two.
sure. Anytime. Yeah, I'm always happy to do this. This is awesome. This is
Yeah,
great.
but just before we go, anything else that you want to add about you, your business, or
Nothing comes to mind. I mean, we can always continue on another session, right? Because I feel like the biggest topic, a lot of times I work with a lot of younger clients that just graduate from college is student loan debt. So that's something I feel like it's really important for a lot of people, listening. How do I manage student loan debt? And there's so many different ways and so many different, you know, opinions, right? What's the right one for you? So I think that's important.
Okay, so I'll make sure I provide your information below in the description. So hopefully we have people that will be able to reach out to you and get
Yeah,
get some help, and for you to also add value in their lives too. So, but
absolutely.
all right, Steven,
Appreciate that.
thanks
Thank
for your
you so
time.
much.
But hey, go
Yeah,
enjoy
likewise.
a good dinner, and then make sure you
Sure.
go run tomorrow and do some.
Oh man. Okay, so I have to promise you I gotta run tomorrow. All right. Let's do this.
All right, but good night, man. Thank
All right.
you.
Have a good night, bro. Thank you. Yep. Take care.
So that was my conversation with financial advisor Steven Zhou. Super smart guy, so informative in such a short time span. I hope that we all were able to get some value out of the education that he just provided. And please reach out to him. He said that he's open to taking on more people. So I'll make sure I leave his information below, his email, his phone number, and hopefully he can help add some value into your life and your future and some of your investment plans. So thank you for your time. I hope you enjoyed this. If you enjoyed this, please like, subscribe, and share. Have a good night.